Good weekend all. Ira Epstein of Linn Associates with your weekend edition of your financial market wrap-up. And this is for Saturday, the 21st of November, 5 p.m. So here we are. I'm locked in the house, so I just took an extra day off instead of doing it Friday. Figured I'd enjoy my Friday night watching TV, and we're here. Now, a couple of things I want to remind you of before we get too far. The first thing is that if you like these, do me a favor and hit like when you're watching it on YouTube. If you don't like them, you can do the same too. You can write me messages. Typically, I'll look at them. I sometimes respond, but I look at them every time I put out a recording. So I think you'll like that. The second thing, I'm going to be having the live webinar. So let's talk about that for a moment. This live webinar comes out this coming Monday. And that is the 23rd, if I'm correct, of November at noon Central Time. It's by invitation only. If you're on my mailing list, you've already got one of your invites today, Saturday. You will get another one tomorrow and maybe a final one on Monday morning as your reminders. If you didn't get one today, your best bet is, I'm telling you this, on Monday morning, you might want to give a call, because you want them to send you out the invite or have me send it out to you. It'll be one of the two. But if you don't get it, you can't get in, and it is a password restricted invite. Seating is very limited. I can tell you it's filling very quickly with my subscribers. So now the question is, if you want to join, there's X amount of seats open. And I want to remind you of another thing. This webinar is not free to everybody, okay? It is free to all my paid subscribers. But to non-paid subscribers that have been into one or two of them, no, I want a small fee. But it's the same fee if you subscribed to my subscriptions. So why not subscribe and you get this thrown in? That's my point. All right, let's talk about the markets. Even though you've been chopping around, this is one of the best Novembers on record for the S&P, for some of the other indices as well. People may not realize that. The open interest, Bloomberg today is carrying a story. You might want to go on to their website about what's happening with the short open interest and how beaten up they've been getting. In fact, that short open interest has been getting beaten up all year. And what we're dealing with now, again, is this yin-yang of COVID and vaccines. What we have on one hand is the COVID's getting worse. You read that everywhere. Europe, the Americas, everywhere you look. The good news is we're probably no more than 2 to 4 weeks from getting the vaccine released in its first stage to our frontline workers. And it's going to be across the United States. So that is the great news. And of course, behind the scenes, you know they're ramping up these vaccines. They're not free. They'll be free to us, most likely, via insurance and things of that nature. But the government's going to help the insurance companies pay for it. That is something to take very big into account. Very big. So which side do you play? Do you play that the market's going to go down because of the immediate news, or that it's going to come back up via the COVID? Already Goldman, and I think Goldman's done it, and JP Morgan have lowered the first quarter expectations because we're not going to have it in time for that. So the first quarter is also going to be impacted of next year. We know this quarter is going to be impacted, if you think not wrong. People everywhere are getting shut-ins, lockdowns, whatever you want to call it. But let's go to the chart action and see what they're doing. On a monthly chart, it's powerful. The month is not over. But if it were, this would be an all-time high close on the S&P. Excuse me there. If we take a look at the weekly area chart, from 3264 to 3582, a straight up thrust. That's almost, 318 points? We'll see if the market can back off any. But this is what's caught the short people in the market. The market doesn't die. You had one break recently where you got from May. You got that from May, and you had that close under the 18-week average, and you came back with a vengeance to a new high. That punishes the short open interest. When we look at the weekly bar, just by itself, What's the swing line doing? The swing line study is a study I created, and what it does is it takes the current bar, which is a current week of trade on a weekly chart, and it says, okay, was the previous, first of all, what is this week? Is it a higher high, a lower low week, an inside week, an outside week up or down? There are 5 variables. And then I created my technique to draw the line to the current bar depending on which one of those the market is. And what I'm looking for are valleys and peaks. In an uptrend, a market makes higher highs and higher lows. In a downtrend, the opposite. Lower highs, lower lows, and no trend will have in some order of this. It can be a higher high and a lower low, or a lower low first and then the higher high. But you don't have the stepping ladder. You're in an uptrend on this. The next thing I put on the charts, and I teach this in the charting course, is I put on moving averages. Now, to me, the 3 main moving averages are the 18-week, the 100, and the 200-week. Got it? Futures markets, the 200-week is questionable. Questionable on certain months because depending on the commodity, most of them don't have, going far back, 200 weeks worth of data. Example. Stock indices. All of the actions up front. You try going back 4 weeks and you just get dots on a chart if somebody wants to trade it or if the exchange has set what they call a theoretical close. That's how it's done. People don't trade those. They're up front. So that becomes the question for all these markets to a degree. You've got to remember that. But you've got higher lows, higher highs, and this market's looking what? Bullish. Support in the market, 33.94. Where's the resistance? When you hit a Bollinger Band, I don't care where it comes in on the chart, the odds of staying over it are 5% of the time. Now that means 95% of the time it won't stay over it. But the idea of the Bollinger Band, it was brilliant that John Bollinger did, is by 95% you can push it out and the market can stay over it. If you go to 100%, it's never going to be over or under the Bollinger Bands. This is called also, sometimes you hit it and you ride it. You have to see what the market's doing. There's a technique. But what I teach is that the first time that band is hit, the smart money, quote unquote, takes money off the table. They may jam their stops up, but they're going to cash in because you don't know that you won't get one of these plays. So that's what I think has happened again. You got up there and the market wants to back off a bit. Slow stochastics, they are either overbought, oversold, embedded, bullish or bearish. They can also be neutral. Right now they're overbought. Any reading over a 70 is overbought. That's my definition. Both numbers going sideways over 80, like they did here, is called embedded, and it's often accompanied by a move up, and if you have embedded on the way down, by a move down. It ends when the red line closes back under 80. And you also look, if you're on weekly charts, you want to keep your eye on what the dailies are doing. Remember, a week is comprised of those 5 daily moves, so you always want to watch that. In the NASDAQ, again, you got up to the upper Bollinger Band. Do I have to take in, hit your head? Each time you hit it, the market typically backs off. And there you are again. What is the trend? It is up. Higher lows, higher highs. Unlike the S&P, you're not overbought. So I'm looking for solid support in the 11,412, 413 area. I wouldn't want to see prices under 10,942.25. That would break the uptrend. When we step over to the Dow has a pattern of a lower low and a higher high. As I've mentioned to you over and over, I think the pros, when you get to these major moving averages, step in the first time you hit them. That's a different technique than I use, but I recognize techniques, and I've learned a number of them. You think I don't incorporate what I think's the best in the mind? Do you honestly think I don't always look for new tricks? I do. That makes the fun of the game. And I see what they did, but I still think they got out last week, not yesterday, last week at this number, and they're looking for pullbacks. You are overbought. The idea of an overbought market and hitting a Bollinger Band, be it on the upside, I think the pros are smart. Here's difference. This market is trying to embed. Now, to embed, You have to have both the slow stochastic numbers, that's the K and the D, the red and the blue, going over 80 for at least 3 weeks in a row on a weekly chart. That's 1 week. You don't have it on the other weeks, you see? So you're overbought. Overbought markets tend to, if they get there and stay over the upper Bollinger Band, I count each consecutive close over it as taking away one of the 5% of the time numbers. Example, you closed over the number here, the upper Bollinger Band. That gives me a 4% chance for this week coming in that the market would close over it. It did. So now I have a 3% chance or a 97% chance it won't up here. But it tells me something else. It tells me this market is not to be messed with on the short side. It is screaming at you, I want to be strong. It's very different than hitting the band and turning back down. Remember that. There are personalities to how the market hits bands and what it does with it. In the 30-year bond, this was called running the lower Bollinger Band. Now, had the market embedded. So let's take a look right here. Both numbers under 20. Come on, under 20, and then right here under 20 through November 6th. If the red line closes over 20, the odds are strong that the market's going to make a run to the closest main moving average, which in this case is the 200-day. And here's where you're at the close of business right now. I still think that's a very strong possibility. Do I want to be short a market like that? No. So while the trend is down, losing that reading, I'll trust the slow stochastic. Why? Momentum often leads price. That's the reason why. 10-year note. You did not embed. You just got oversold. You're correcting. This is still in the bearish camp, okay? Dollar index. If this market takes out this week's low, 92.18.5, you will get a pattern of lower highs. You already have the lower low. You have momentum pointing down. Momentum is oversold, so be careful. That's not to say you can't go lower, but again, the first challenge of the lower Bollinger Band, I would think the pros are waiting at that like this. All right, let me take some money off the table. In the eurocurrency, if the eurocurrency can take out this week's high, which was 190.15.5, you could end up very quickly with higher lows, for sure, at that point at least, and higher highs. That doesn't mean it can't give it up later in the week and have an outside week down. It could. It's only going to be Sunday night, Monday when the first trades come. But if that occurs, the odds favor wherever this Bollinger Band comes in, that'll be a resistance point that the pros move on to take some money off the table. Canadian dollar. The first hit of the Bollinger Band is where I think, because you were in an uptrend, the pros took some money off the table, and I think they're waiting to buy the market back at 75.67.5. Why not? They signed a deal today with the UK. It's a one-year deal, but it gets over this year's hump as Brexit takes place, and then they'll do a longer-term deal after the Brexit part is done. Smart move. Get it behind you, and they have. I like that, and I think it benefits them and the UK. Japanese yen. The market has been everywhere. It had an outside week up. You took out the low of that. This was the outside week up. If you take that out, I'm looking for the market to retrace to the nearest moving average. It did it, and then it's come back with a vengeance, and it keeps hitting, as you can see, this upper Bollinger Band. So interesting move. Very hard to catch anything on this market. I don't know how. It's too volatile right now. Bitcoin, I'm reading today, they're talking $300,000 in one article. And what this market's really about is people are recognizing that Bitcoin is doing way better than gold as a safe haven right now. Don't get me wrong, and don't write me that how could something that has nothing behind it do that? Gold is tangible. I'm the first one to agree with you. But this market is on its own. Does it have any purpose other than speculation? I'll give you my secret word. None. Zero. It's never going to be a barter for exchange, is my opinion. There will be cryptocurrencies. They will be released by central banks. They will replace money down the road. What do we have to keep working with money? We've got all these electronics. But The governments are going to want to tax you. They're going to want to know where this money is going. They're not going to bring on currencies for barter in any manner they don't control. They don't control this. This is a different vehicle altogether. When we take a look at what the Brent and the WTI, it still favors the Brent. The reason is they can control supply in the OPEC Plus. That's what they're doing. It's expected that on the upcoming meeting, November 30th to the 1st of December, that they will announce that they're going to postpone getting back the production cuts, putting them back on the market. I think they're going to extend it anywhere from 3 to 6 months. They'll probably want to see how the COVID does, what the economies do. They can buy that time. By the way, they can call another meeting and turn on the oil just like that too. When you come to the Brent itself, are you trending? No. You've got a lower low and a higher high. You're going sideways in what I call a pipe. The momentum is up, but you're stuck here between these between the Bollinger Bands. You haven't been able to hit the upper Bollinger Band yet. It would not surprise me to do so. And the reason is I think there's more good things happening down the road for crude oil than bad between the vaccines and oil cuts. When I look at WTI crude, it's the same thing. You're stuck in the pipe, as I call it. The pipe being the black lines, momentum up, no trend. You might make it to that upper Bollinger Band, but I'd look for a lot of resistance to come in there. In the Rebob gasoline, no momentum to the downside. You refused it. So you had your one big attempt at a breakout. You made a lower low the next week, right? Let me get it there. You failed to stay under the band, and now you made your retracement all the way back to the 18-week average. This is the kind of trade that kills traders. They're looking for breakouts one way or the other, and you typically don't get them when you're in a pipe, as I call it. When we come back and we look at the rest of the market, a lot of green, obviously, on the day. So, again, I want to remind you, we're going to be having my webinar. It is this coming Monday. I hope you come in. It's at noon. Again, if you're a subscriber, it's free. If you subscribe ahead of time, just let us know. We'll be happy to put you in this for free as well. Other than that, I'll see you at the webinar. Monday, noon. Take care.